Hello, very good morning to all. I'm Kelvin Wong here again, the Senior Market Analyst of OANDA Asia Pacific. Very good morning. Welcome to today's Daily Dose of Market Insights. Today will be the Wednesday, 6th of March 2024. All right, so before we start, let's take a look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the short-term technical outlook on the cross assets, let's have a recap of what has taken shape yesterday in terms of the cross asset performance and as well as key events and key economic data. So let us start with the cross asset performance first in terms from a intermarket perspective. So what we could see yesterday was in terms of intermarket correlation, there was actually a intraday breakdown. Why? Because the major US stock indices did not benefit from a soft US Treasury yield. Okay, so what do I mean by that? If you look at all the four major US indices actually closed in the red, with the worst hit was the Nasdaq 100, which is down negative 1.8%. Then thereafter followed by the Dow Jones and the SPX down around 1%. And the Russell 2000 0.99%. So what we could see yesterday's underperformance was actually being dragged down by the mega cap stocks. Later I share which mega cap stock was the culprit to actually drag down the US stock indices yesterday. So what we could see over here is that despite the fact that the US 10-year Treasury yield, so let me share with my screen over here. Okay, yes. So this is the US 10-year Treasury yield. So the US 10-year Treasury continued to remain soft. So yesterday, it actually tests that key near-term support level that I've been highlighting since late last week, 4.14%, and it also closed down below the mathematical key 200-day moving average. So indicate to us that there's actually continued signs of softness below this key lower limit of the major resistance zone at 4.33%. All right, so in the if you look at from a fundamental perspective, based on the rule of this cost of funding, so what we could see over here is that if the US 10-year Treasury yield getting very soft below 4.33%, and now it has now attempting to break down below that key near-term support of 4.14%. So indicating to us there's actually a higher chance right now that we may start to see the start of a multi-day to multi-week, I would say, multi-week down move to actually in fact retest the 3.82 level and 3.8 level. Okay, so that was the swing low of 26th of December and 1st of February this year. So in terms of a fundamental perspective, that actually represent lower cost of funding. That means, i.e., lower cost of corporate rates when corporates do their what we call it funding activities in the money market, a bit in the long-term what we call bond market. So that actually should actually benefit growth stocks. Why? Because growth stocks, they actually also required lower cost of funding to fund the expansion, and also those who knows a bit of what I call cash flow discounting, whatever net present value of a fundamental, we call it, if you do a discounting model, that could actually increase the net present value of future cash inflow for public equity as well. So net, by right, it should be beneficial to the US benchmark stock indices. However, because the US benchmark indices was hit by several underperformance of the mega cap stocks, and we know that the mega cap stocks is actually the driving factor since 2.5 years ago, and their significant weightage has started to increase over last year and even the start of this year, making a significant contribution to the gains of the overall US stock market. So it's very top heavy on this mega cap 7 stocks. So any downturn in either one of them will actually cascade a negative feedback loop across the US stock market. So that actually explains why the benchmark US stock indices, the four of them actually closed in the red yesterday, did not benefit from traditionally, but right, it should, from a softer US 10-year Treasury yield. So this softer US 10-year Treasury yield managed to spread throughout the rest of the cross asset classes, so making the dollar overall also dollar strength also being kept as well. So if you look at the dollar index, it's been testing in the last week or so at the key near-term support level at 103.70. This is the dollar index. So it's actually an aggregate of major pairs, excluding the Aussie and Kiwi, because Aussie and Kiwi is not included in this dollar index. So later I explain to you, Kiwi still, Aussie still remains rather weak in a sideways range configuration due to its linkage with China. All right, so over here, let's go back to the dollar index. So dollar index actually getting weaker, start to show lower high, this high lower than this high after reversing or inching downwards from a key medium-term resistance at 104.85, which was the golden ratio of the 61.8% Fibo retracement. Just a recap from the previous medium-term down move that has taken shape previously in October last year, start October last year, towards the end of December last year as well. So what it means that the dollar strength, this movement over here could be only a counter trend rebound scenario, stopping right at this 61.8 Fibo retracement, and right now is attempting to shape a further potential down move. So for sure, if you start to see a breakdown below the 200-day moving average at 103.70 dollar in aggregate over here, most of the dollar pair may start to shape further dollar weakness, at least from a multi-week perspective. So if you look at from a weekly chart over here, very clearly we start to see a bearish shooting star as well on the previous month of February, upon hitting that key resistance level. All right, so yes, so it's also being supported by this ongoing US 10-year Treasury yield weakness. And also do not forget over here is that this US 10-year Treasury yield weakness also was translated to a stronger strength in the in gold price as well. So if you look at gold prices, the XAU/USD continue to actually rally yesterday and almost hit a fresh all-time high, depending on which quote you look at it. So let me share with you the chart, the daily chart, so that you can get a better picture of what I'm saying. So US 10-year Treasury yield weakness translate to dollar strength weakness, managed to translate to gold strength. All right, because why? Because if you hold gold is a zero income yielding asset class. That means, i.e., they don't produce any fixed income coupon compared to bonds. All right, or you place a fixed deposit in a bank. So whatever you start to see lower cost of funding globally using the US 10-year Treasury as a benchmark, that could actually implies the cost of holding gold is also getting lesser and lesser. So that actually explain why oh, excuse me, called a choke. Oh my, okay, that should actually explain why the strong push up at the 2000/1975 200-day moving average as well. That strong 3-day of rebound that broke above this 3 years of complex range configuration that is in place since August 2020. So this 2149 was a printed on OANDA's platform that was on the 4th of December. So yesterday's based on OANDA's price action, it hit 2142. So more or less almost touching the fresh all-time high. But some quotes managed to actually print an all-time high. But nevertheless, in terms of this, the weekly candle. So I could see over here is that if this weekly candle managed to maintain such strong bullish candlestick to end the week very similar of the price action, what we could see over here is that the long-term trajectory movement of spot gold XAU USD is slightly intact. So this long-term, so I'm talking about multi-week to multi-month. So this is the weekly chart. That means i.e. what I'm referring to, that since the low of 28th of September 2022, gold has been trading has been now in a high probability price act based on the technical perspective, high probability of resuming its bullish impulsive leg within its major uptrending movement. All right. Next major resistance look out for will be at 2010, 2260. Will it go there within a single day? The answer, I tell you, I do not know. We are taking things one step at a time. Will it potentially shape a pullback from an intraday basis? Yes, the risk is high because later I'll share with you, there are some signs of what I call exhaustion in the shorter term. All right, so do not forget over here is that we got to ask ourselves what time frame we are trading at, and what is our horizon if we base on the different chart that we are looking. All right. All right, so this is the key situation that took shape yesterday in terms of the market performance. So let me share with you all what causes the drag on the Nasdaq 100 yesterday. So Nasdaq 100 yesterday was dragged down by Apple. So Apple is actually the second biggest weight cap stock inside the Nasdaq 100 and second biggest weight cap stock in the S&P 500. So if you look at the S&P 500 heat map, using the S&P 500 as a proxy, as a general proxy of the state of the US stock market, some may maybe argue that S&P 500 may not be a good proxy, given that its weight over here is heavily weighted on the mega cap stock, but that is most market participants are watching. So what I could see over here is that we see a very sea of deep red in the mega cap stock space, 7 of them. So the worst hit was Apple, so dragging down Microsoft as well, close to down -3%. And Meta negative 1.6%, and Tesla was the worst hit among the 7 mega cap stocks, down -4% due to sluggish sale in China and globally in terms of their latest model, and also given the fact that right now we also see an abundant flood of EV vehicle being flooded out through the market as cost of production is getting cheaper and cheaper to produce an EV vehicle from other competitors, right, like BYD in China. So the one that is confirmly holding the fort will be NVIDIA. So NVIDIA is very, very important. Why? Because if we start to see NVIDIA starts to tilt down, this is where very likely the Nasdaq 100 more or less has hit a major resistance zone, and we could start to see the start of a potential multi-month corrective decline. So for those later, for today's daily dose of market insight, I will share with you all the technical outlook of NVIDIA, because NVIDIA right now has a significant impact on the Nasdaq 100 and even the wider space of the US stock market. Okay, later I'll share with you why. Because of its performance right now is carrying the entire benchmark US stock indices, means the one that is holding the fort. Okay, so very clearly, yesterday's the Nasdaq 100 performance throughout the later session, it managed to stage a rough slight recovery due to NVIDIA managed to close in the green at the close of towards the last few hours of the US session, positive 0.85%. Right, what we could see over here. So now before we jump straight into the short-term technical outlook, let me share with you all some key important data that took shape yesterday. So key important data news release for the ISM numbers, US ISM services data. So why ISM is much more important than the manufacturing ISM? Because IS services sector represent 2/3 of the US economy, rather than close to, I think, less than about 1/3 from the manufacturing sector. So if you look at the ISM figure that was released yesterday, right, let me share, yeah, over here. So ISM, yeah, services PMI. Okay, let me expand my screen bigger so that you guys could see. All right, so ISM services came in in the expansionary mode. So anything about regarding PMI data, anything that's above 50 is in the expansionary mode, so at 52.6, so slightly below 53.4 that was recorded in the month of January, and slightly below expectation of 53. But if you look at the one that is the leading component is the ISM services new orders. So new orders is a survey where services providers manage to actually see requests, I mean, advanced request booking for their services. This is called the new orders. So new orders actually managed to jump, according to expand at 56.1 versus 55. So if you look at the leading component inside the services ISM PMI data, the trend, the expansionary trend is still pretty much healthier for this leading sub component. All right. So if you go to the 10-year trend, okay, so what I could see over here is going to inch higher, by higher, printing a higher low, and right now a higher high based on the latest release figure yesterday for the month of February. So all in all, what we could see over here is that the fact that the US economy hasn't slipped into a recessionary period yet, so that could also potentially means that more or less the Fed is in no rush of cutting interest rates. So no change based on the CME Fed Watch 2, that means based on the pricing of the Fed funds interest rate futures. Right now, market has really reduced the expectation, maintained steady ahead of today's Fed Chair Powell testimony. So we are still looking at the first rate cut to come in right now, to delay to June instead from March this year. That was initially priced at the start of the year, and the total number of interest rate cuts for 2024 has been reduced from 6 to 3 to 4. So that actually also come in line with the latest Federal Reserve dot plot of median Fed officials Fed funds projection for the Fed funds rate for this year, also looking at an implied interest rate cut of only 3 for this year 2024. All right, so with that, right, now that pretty much sum up in, okay, before we go over here, there is also a slide GDP data earlier this morning, 8:30 from Australia. So Australia GDP data was actually pretty much mixed. So from a year-on-year basis, longer term, year-on-year, the Q4 GDP data annualized it managed to grow slightly above expectation, 1.5%. Markets expecting 1.4%, but based on the quarter-to-quarter basis, it actually inched down slightly to 0.2% quarter-on-quarter versus 0.3% from a consensus perspective. So overall, what we could see over here is that the actual numbers based on Q-on-Q and year-on-year for the Australia Q4 economic data represent to us that there is still no signs of overheating in the Australia economy. So that could actually reduce that whatever hawkish rhetoric that is still pretty much prevalent in the RBA governor. So every time the RBA governor speak in public speeches, she still mentioned about the risk of the Australia economy potentially could actually still be in the risk of overheating due to the fact of demand is still strong in Australia that could push out elevated services prices, services inflation, I would say. But however, given the fact that the Q4 GDP number that was released earlier this morning indicate to us that the Australian economy is not really in a state of overheating. So that actually also causes the Aussie dollar to actually remains rather lackluster, neither here nor there. It couldn't break above the 20-day moving average, it couldn't break above the 50-day moving average, and it couldn't break above the 0.65 30 key pivotal resistance that was highlighted yesterday. All right, so that pretty much sum up for the key economic data and the cross-asset performance that I'll share with you all. So now let's jump straight to the situation of the US stock market. Okay, so before we jump straight into the cross-asset classes, so today's a bit special. I'll share with you some of the important notes to take note of while we are looking at the US stock market from a trader's perspective. All right, so if you look at this chart of the US stock market, okay, where am I? Okay, where is this chart? Yeah, this should be the, give me a minute. Yeah, this is the chart. Okay, so this is the chart of the year-to-date performance as of 6th of March. What I did over here is that I pull in NVIDIA, the mega cap 7 of them. That means the 7 will be including Meta, Amazon, Google, Miss Alphabet, Microsoft, NVIDIA, Tesla, Apple, plus Netflix. All right, and also the semiconductor ETF stocks. So that comprises of everything. Your super microcomputer, which recently just got a parabolic up move due to the AI optimism, and as well as AMD, which is also riding on the AM optimism as well. So all of them are actually part of this semiconductor ETF. So if you look at who is the leader right now that is leading, for sure NVIDIA, which year to date, right now we only seen only 2 months has really ended for 2024. So within these last 2 months, NVIDIA has really added in a whopping 78% year-to-date return. So mind you, 78% versus the mega cap 7 stocks and plus Netflix. Netflix only 24%. That's only about 3 times more, and also 3 times more than the aggregate semiconductor stocks ETF. And if you compare it with the Nasdaq 100, it actually close to about 10 times or 9 times more than the return on Nasdaq 100 and the S&P 500 and the equal weighted S&P 500. So this is where most of some market participants will actually look at this equal weight S&P 500 to have a better gauge of the US stock market. So the S&P 500 equal weight, that means i.e. all the component stock in the S&P 500 is rebalanced based on their equal weightage rather than market cap. So that means i.e. NVIDIA inside S&P right now, based on this RSP ETF, has equal weight compared to Apple, has equal weight compared to super microcomputer that was recently added. So that has much more, we call it balance in terms of how it being weighted. So based on the equal weighted S&P 500, it actually rose more than 10 times or 15 times, okay, and the Russell 2000 only up 2%, and the US Treasury bond negative 2-3%, and this is the weakest among the mega cap stocks, which is Apple, down negative 8.24% for the year to date. So for sure, right, if you look at the situation right now, as a trader, I'll be monitoring very closely Apple, which is one of them. Why? Because Apple itself is the second biggest component in the S&P and Nasdaq 100, and also Nvidia, given the fact that Nvidia is the one that is the market, the leader that is holding the fort and that is driving the significant potential return currently that we see so far on the major US stock indices, especially the Nasdaq 100. So let's take a look at the technical first, because right now we are trading. We're not talking about fundamental or investing. So from a trading perspective, over here, let's look at the Apple, because Apple is the drag of the Nasdaq 100 yesterday. So if Apple yesterday's push down in price action, which is I share with you close to negative 3%, managed to come close to any support level. Okay, and potentially that could actually imply if there's a bounce. So at least in the short term, there could be at least a recovery on the Nasdaq 100, despite yesterday's very strong negative push down. All right, so let's look at the chart of the Apple. All right, so today's one will be slightly longer. Why? Because of the important movement that has taken shape yesterday. So if you look at Apple over here, okay, this is the chart of Apple. Okay, so Apple, right, what we see over here is that in terms of the price action, it actually shaped two gap down, gap one, gap down one, gap down two. So this is kind of like a breakaway gap from that previous support level. Okay, this support level here. Okay, a breakaway gap. Then yesterday was a second gap down. So this is a so-called continuation gap. And where it gap down right now close to a key long-term pivotal support level at 166.17. Okay, why this is important? Because if you look at Apple, right, taking into account of the 14th of December intraday all-time high at 119.62, it seems to us that Apple right now is actually configuring in a major double top formation. Okay, but nevertheless, price action don't always go straight down. What we could see over here, if price action of Apple going to do another gap down today later, potentially, right, means there's another gap, but it start to form at the end of the day another signs of what I call very small little candlestick, that what it is shown yesterday. Okay, this is what I call inverted hammer, and it start to form a very small like doji like candlestick, and better still a hammer. So this is mean that today's potential gap down, if it occurs, it means that it's the exhaustion gap. All right, so anything that's exhaustion, we call it climate sell off. So anything that is climatic sell off potentially could shape a bounce back. Okay, so where does this potentially bounce in the first step? So for sure, this will be the key level. Okay, at least in the short to medium term. Why? Because this is the level where price action broke and kickstart that breakaway gap down. All right, and also confluence with the 20-day moving average as well. Okay, so if you look at the RSI also came close to an extreme oversold level. So this extreme oversold level is the lowest level since 17th of August last year. And we have the Apple put call ratio. This is what I call something like an option market contrary opinion. So the put call ratio also has to inch up towards the upper boundary of this Bollinger kind of a Bollinger Band upper limit. So anytime it always hit at the upper limit, right? So previously it hit the upper limit. Price action of Apple, let me share, price action of bounce, hit the upper limit previously on 3rd of January, also bounce. 17th of January, it bounced. And previously, the most drastic one was 16th of August, where it actually bounces off as well. Okay, then also after that, 27th of September, followed by the 18th. Okay, this one is not, so it's only, it didn't go above the upper boundary. So I could see over here very clearly, the put call ratio goes above the upper limit of the Bollinger Band. So indicating to us that there is also extreme fear based on the Apple put call rate option ratio. So indicating to us that this 166.17 long-term pivotal support is very important. If Apple managed to shape a bullish reversal candlestick pattern at the end of today, there could be a potential high chance that Apple could bounce. That means, i.e., the Nasdaq 100 could actually do a bit of rebound potentially as well going forward. Then for sure, lastly will be Nvidia. So Nvidia, once important, I share with you all, it carries the fort of the market, the US stock market. So if you look at Nvidia chart over here, where's Nvidia? Yeah, this Nvidia. Okay, so Nvidia chart at this point in time, right, it's still bullish. There is no signs of exhaustion. Price action was very positive yesterday. Continue to be an uptrend. So if you look at the current RSI, no signs of exhaustion as well, going to shape higher high, and haven't even hit the extreme overbought level that was seen 2 weeks ago. All right, so still holding on to above this upward sloping line on the daily RSI. So overall, I could see is that the medium-term structure of NVIDIA based on the daily chart still remains in a bullish dynamic. Right, so potentially, right, with Apple managed to get down, but get down to a close support level, and I share with you there are some signs of positiveness on the Apple chart earlier on, and Nvidia continue to evolve in a medium-term bullish dynamic, where the RSI is still exhibiting momentum strength. So going forward, right, there is a chance that Nasdaq 100 could potentially shape a bounce, at least from a short-term perspective. All right, so this is how I look at things. Okay, if always we start to see a drastic fall on a single day basis, then we pierce down into a lower, we dissect lower what causes this fall, and this is how we take up from that based on from a key stock component technical analysis on this component stock within that index. All right, so with that, let us now jump straight to the short-term technical outlook. All right, so short-term technical outlook, let us start with the major indices first. Let us start with the Asia, Japan 225. So Japan 225 over here, right, what we could see, still recall that previously at the start of today's this week, we flipped to a bearish bias looking for a medium short-term pullback scenario. So that short-term pullback scenario, we highlighted two support levels to watch, 39,640 and 39,260. So yesterday during the US session, in fact, right at the close of US session, the market printed a low of 39,670. So almost hitting that 39,640 first support level they are watching, and managed to shape a bounce. And what we could see over here is that the RSI also managed to shape a bullish breakout as well right now. Okay, breaking below that previous lower high that was being congested, and where it broke out right at the 50 level mark. Okay, so that indicate to us that short-term bullish momentum has started to resurface back into the Nikkei 225 or the Japan 225. So with that, we'll be flipping back to a bullish bias, given the fact that this short-term minor corrective pullback is more or less has ended, as long as 39,640 short-term pivotal support holds for today. First resistance zone to watch will be at 40,490 slash 40,690. Only an hourly close below 39,640 will negate this bullish tone to see the extension of another round of minor corrective decline towards the next support level at 39,260, followed by 38,850, which confluence with the upward sloping 20-day moving average that's coming to act as a support level as well, and act as a support level, similar support level, and the minor swing low area of 29 of February. That's confluencing at 38,850. Okay, now what's next for the Hong Kong 33 index? So before we jump that, let me expand my screen so that you guys could see. Okay, so Hong Kong 33 index, right? Hang Seng index managed yesterday was very weak due to the lackluster, or what you call it, not so much clarity on the two session, where the second day of two session, where China Premier Li Qiang officially announced that 5% GDP growth target for this year for China, but he did not emphasize how they are going to meet this goal, and he also did not reveal much about an additional target stimulus. So market actually sold off yesterday on the Hong Kong 33 index, but where it stopped, right, it managed to pause at the first support level that we highlighted, 16,080, before reversing up again today. So what I could see over here, right, it's more of a range bound situation right now. So we will be flipping to a neutrality stance for today for the Hong Kong 33, given it's coming very close to the upper limit already. So 16,670, followed by 16,080 for today. So turning to a neutrality bias on the Hong Kong 33, at least in the short term. So now let us go to the German 30. So German 30 was rather firm yesterday. So what I could see is that yesterday's German 30 managed to shape a slightly higher low above Tuesday's low, and right at the short-term pivotal support that we highlighted as well, 17,690. And what we could see over here is that much more clearer, the RSI, after hitting the oversold level on Tuesday, yesterday, it managed to shape a higher low. So indicating to us that some signs of short-term bullish momentum is coming back into the German 30 index, all right, which is DAX for short. So as long as the 16,690 short-term pivotal support holds, we will still maintain that bullish outlook on the German 30 index. First resistance to watch for sure will be at the 17,840 for today, 17,800 90. Above it exposes the next intermediate resistance, which is a Fibo extension level, or defined by a Fibo extension level at 18,050 slash 18,100. Okay, only an hourly close below 17,690 will negate this bullish tone to see another round of a minor corrective decline towards exposing the next support level at 17,450 slash 17,355, which also confluence with the upward sloping 20-day moving average. So right now the tricky one, Nasdaq 100. So Nasdaq 100 yesterday broke down below that this green line, the 18,030 Titan short-term pivotal support that we have on this week, this Monday. And where it stopped over here, very interestingly, it actually stopped right at the 20-day moving average. It pierced below and managed to shape this V-shaped bounce. So for sure, this level here was our 17,810. That was the alternative support level. If alternative scenario situation, when 18,030 breaks, that means we are looking for a further extension of that minor corrective decline towards the 17,810 level. So right now, this 17,810 level will now flip into a short-term pivotal support level for today. And given the fact that the RSI also starts to exit from the oversold area, okay, and starts to shape a higher low right now in today's Asia session. Okay, so with that, and also the earlier on that key component stock that I share with you, Nvidia still bullish. Apple, despite it's being weak, but it's actually coming close to a key support level with positive technical elements. So that actually increases the odds of at least a potential short-term bullish bias coming back into the Nasdaq 100 from a short-term perspective. So as long as 17,810 short-term pivotal support holds, the first resistance zone to watch out for today will be at 18,095 slash 18,160. Very clearly the graphical congestion zone over here, and as well as if we do the Fibo retracement, okay, the Fibo retracement is close to the extension level, the what I call it extension, the golden ratio extension, okay, the golden ratio retracement of 61.8% based on yesterday's steep intraday decline. Right, only above 18,160 potentially see a exposure to back to the current all-time high area at 18,335. Only an hourly close below 17,810 will invalidate this bullish outlook to see the continuation of this minor corrective decline to extend it further towards 17,650. So 17,650 is in fact the medium-term ascending channel lower limit of 5th of Jan that I drew from the low of 5th of Jan. A break below 17,650 exposes the 50-day moving average, acting as a support as well, confluencing with this graphical support zone of 17,410, 17,330. So the one that is having the mixed element is the Dow Jones Industrial Average. So Dow Jones Industrial Average broke below the 20-day moving average and broke below the medium-term ascending channel support that I drew from the low of 18th of Jan this year. So given the fact that it's now coming very close to the lower limit of 22nd of February and also very close to the 50-day moving average as well, that acting as support. So given the fact that the RSI has evolved in the oversold area, so but because it being below the 20-day moving average, so I will not be so positive as compared to the Nasdaq 100. I will actually flip to a neutrality stance for today on the Dow Jones Industrial Average, which is the Wall Street 30. So neutral between 38,770 and 38,360. All right, so that sums up for the short-term technical outlook on the major stock indices. Now let us immediately go to the FX market. So FX market, like I highlighted earlier, we start to see dollar weakness, dollar strength weakness. So for sure, the euro dollar will still maintain that short-term bullish outlook. All right, as it continue to hold above the 200-day moving average, but managed to be trapped below the 50-day moving average. So for sure, I do not want to tie it so tightly. So what we could see over here is that we could use this level as a near-term support level. Okay, that was a 2 days low that has been managed to help at 10840, but I will still stick to 10810 level. So what 10810 level, congestion zone area, 20-day moving average, I think as a support level as well, and as well as the lower limit of the minor ascending channel that I drew from 14th of February. So as long as 1.0810 short-term pivotal support holds in any potential minor pullback for the euro dollar, still maintain that short-term bullish bias. First resistance you got to break through will be the 1.0890 for sure. So that was the minor swing high area last Thursday above 1.0890, exposes the next intermediate resistance zone at 1.0935 slash 1.0950 level. So this is the congestion area over here graphically. Then a sterling dollar. So sterling dollar, no change. It's going to be managed to help above the 50-day moving average going above the 20-day moving average. So with that, right, since that price action managed to surpass and bounce off the 50-day moving average, so this is the 12675 level. So this level over here will be like a near-term support level rather than a short-term pivotal support. So the short-term pivotal support level, I will squeeze it more tightly over here, okay, slightly below the 20-day moving average. We saw this congestion zone here as well, congestion area. So this will be my short-term pivotal support level, a tighten one for today. Oops. Okay, maybe let me write it in full. 1.2650 short-term pivot. Okay, so this will be the short-term pivotal support level for today. Then this will be a normal support level. Okay, remove this. This is for the sterling dollar, that means the GBP / USD. So, or the pound, they call it in short. Okay, the pound. Okay, so as long as any potential minor pullback manage to hold above the 12650 level, we'll still maintain that short-term bullish bias on the sterling pound. So for sure, it got to actually as long as this level holds, potentially we could see a retest back towards 12740 / 12760. That's almost being hit yesterday as well. All right. So however, if we start to see a breakdown below 12650, then we start to see another round of very choppy minor corrective movement to retest last Friday and last Wednesday swing low area at 12610, 126 figure level. Okay, and now moving on, next will be the Asia Pac currency. So for the Asia Pac currency, let us start with the, okay, where is it? I think it's here. Yes, so let us start with the dollar yen. So dollar yen, no change, going to be congested within a range configuration, but it seems to us that it's getting weaker and weaker, and it continues to print lower high. Okay, lower high. Okay, so no change over here, still using that 150.70 / 150.80 as a short-term pivotal resistance. First support level to watch will be 14960, so that is actually the range lower limit. A breakdown below 14960, that means a clear break below it with an hourly close, potentially exposes the next near-term support at 14880 / 14840. So this congestion zone over here. However, an hourly close above 150.80 mark level. So right now, price action is really attempting to trade below the 20-day moving average. So that also represents also another form of weakness on the dollar yen. But however, a breakup above 150.80, that means we see a very clear hourly close above 150.80 will invalidate this short-term bearish bias tone to see a squeeze up to test the major resistance zone of 151.40, 151.95. Aussie dollar, so that is the weakest currency right now. That means that that is the particular currency pair that is still showing a bit of dollar strength. So what you could see here, it still remains trapped below the 20-day moving average, and as well as this minor descending trend line that is being kept previous rally since the high of 22nd of February. So yesterday it going to push down and almost hit the first support that we highlight, 64.70. So yesterday low was 64.77. So as long as this 65.30 short-term pivotal support holds, potentially we still maintain that short-term bearish bias within this very complex sideways range configuration for the Aussie dollar. First support level to watch will be 64.70. Below it exposes the 14th of February minus swing high area at 64.40. However, an hourly close above 65.30 will invalidate this short-term bearish bias to see a squeeze up to test the 200-day moving average and the 50-day moving average that is acting as a resistance at 65.60, 65.80. That's also confluence with the swing high area of 20th of February and 23rd of February as well, graphically. Okay, so now that is for the FX market. Then let us go to spot gold. So spot gold, what we see is that yesterday we will have a bullish bias. It almost hit the all-time high based on OANDA's pricing on our OANDA's pricing. So I will use OANDA's pricing all-time high at 2,149. So that is the high that was printed on 4th of December last year. And given the fact that we start to see a bearish divergence on the hourly RSI, price action shape higher high, but RSI shape lower low and starts to exit from the overbought level. So that is given an indication to us that this push up that was seen at the start of this week is a bit overextended in the short term, and potentially right now we could shape a much more pronounced minor corrective decline scenario. So as long as 2,149 short-term pivotal resistance holds for today, potentially a minor corrective decline scenario could plays out could play out on the spot gold XAU/USD. First support level to watch 22,110, followed by 2097 slash 2090 next over here. So what is this level? If you do the Fibo retracement, taking into account of the low towards the high, okay, it's close to the 23.6% and 38.2% Fibo retracement level. Okay, confluencing at this 2110, 2097, and 2090. However, only an hourly close above 2149 will invalidate this minor corrective decline scenario to see the continuation of this impulsive up move towards the next resistance level at 2175. Then what we have for West Texas Oil. So West Texas Oil yesterday managed to shape their pullback, but the pullback continued to hold above the 200-day moving average and the 20-day moving average, confluencing at the predefined 78.14 short-term pivotal support that we have since the start of this week, which is on Monday. So as long as, and also you see the price action start to shape lower low, similar low, and however the RSI start to shape a higher low. So some signs of bullish momentum has started to come back in the short term for West Texas Oil, or it indicated to us that yesterday's sell-off has started to lose its downside momentum. So first resistance to watch will be at 79.60 level. So 79.60 was yesterday's minor swing high area. So as long as a 78.14 holds, we still maintain that short-term bullish outlook. A breakout above 79.60 potentially exposes the next intermediate resistance to watch will be at 81.65. Only an hourly close below 78.14 will negate or invalidate this short-term bullish bias to see another round of choppy corrective decline scenario back into its range configuration again, with the test of the next support level coming in at 76.20/75, which is defined by the 26th of February minor swing low and 15th of February minor swing low, confluencing with the upward sloping 50-day moving average as well. Okay, so that pretty much sum up with the short-term technical outlook on the various cross asset classes. So before we go, what are the key economic data to look at for today? So key economic data to look at for today, in the Asia session, we're very quiet. Then what we have the European session. Over here, we do have the EU retail sales figure for January coming in at 6 p.m. Singapore time. Then thereafter, we have the spring budget for UK at 8:30 p.m. Singapore time. Then for those who are looking for the looking at the Canada dollar, we have the Bank of Canada interest rate decision. Market is expecting no change, but very similar for the rest of the other central bankers. So they're actually also in the mode of deciding to cut interest rate as well. We'll see how the decision goes. 10:45 p.m. And most importantly, at 11 p.m., we do have Fed Chair Powell day one testimony to Congress. So market participants will be paying very close attention to his testimony, especially during the Q&A session that's being quizzed by the congressman. Does he deviate very much from the current Fed speak? So the current Fed speak that we hear so far from Federal Reserve officials is, i.e., they are in no rush of cutting interest rate for this year. So more or less, they will still cut, but they will come at a later stage. So some of them are looking at the summer months for June, and some may pencil in only one cut, but net on the aggregate market is still expecting 3 to 4 cuts before 2024 ends. Okay, so something to take note of for today. So with that pretty much sums up for today's daily dose of market insights. Slightly later today. Why? Because based on what is the important, based on the current price action significantly that has transpired on the US stock market yesterday. So this is hopefully that extra tidbits that I share with you all on how I look at things, and hopefully that you guys could have a better picture of it. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.